This week, we are conducting 3 interesting webinars. At 10 a.m., markets are changing. Is your investment strategy keeping up? In this webinar, we will be discussing about how markets are evolving and how the investment strategy need to evolve in order to create long-term wealth. At 11 a.m., your roadmap to $1 million milestone. In this webinar, we discuss on how to reach your $1 million milestones. At 12, most investors stay consistent with SIPs, but very few know how to truly scale their mutual fund portfolio. In this webinar, we discuss about how smart investors use market correction, how SIP step-ups and asset allocation works, and timely portfolio decision to create stronger long-term wealth outcomes. If you are interested to join the webinar, click the link in the description below. Never miss a chance to learn something new.
This result season is probably one of the weakest in a long time. We are not seeing companies beating expectations. It's become a rarity, and investors have already lowered their expectations significantly. Despite the investors and analysts lowering their expectations significantly, companies are not able to beat even those lowered expectations. And in many cases, if the company is already trading at a higher valuation, it tends to get punished after the result. This is the story of companies that fail to meet expectations or fail to beat expectations. Then there are companies where there are tired bulls waiting to sell. In this case, when the company beats the expectation, on the day of the result, the share gets sold brutally. So there seems to be no urgency to buy and a strong need to sell. Unlike the earlier quarters where if the same scenario played out, people neither felt a strong need to sell or buy. They just wanted to maintain the portfolio, maintain the valuation and feel good. Today, investors are calling to action and wanting to act decisively. Either ways, if the company beats expectation also, in some cases they want to sell. If the company doesn't fail to beat expectation or fails to meet expectation, they still want to sell. This is especially true of companies where foreign investors have a high holding. But we are seeing in the case of some companies where results were expectedly bad, like you have seen in Cipla, that after the bad result, the market is heaving a sigh of relief and you are seeing a bounce. Overall, following results used to be something which we enjoyed for those 30 days when they used to come out. Now we have extended the result season to 45 days. But there's hardly any excitement about a result season these days. And that has to do with a few very strong reasons. One is our expectation setting as investors and analysts has become extremely aggressive. When we set expectations aggressively, we are actually setting ourselves up for disappointment and we take away the excitement which can come if we set expectation realistically and then you get a really nice beat on those expectations. So we are actually killing that spirit. It also has to do with the over-researched nature of companies. Today too many people track companies and companies are also over-owned mostly. If a company is liked by the mutual funds, you will see that Indian mutual funds own not less than 25% in that company. In many companies, the mutual fund is the primary shareholder, the promoter is lower than the mutual funds. This again puts a tremendous pressure on the stock price because there is no way the mutual funds can buy further and there is nobody else to buy the way a mutual fund can buy. So this over ownership is also taking the joy away out of the result season. So even when a company does well, everybody is tired. So this is like damned if you do, damned if you don't with respect to doing better than what the market expects of you. The companies are really facing the heat. And I think the engagement between companies and analysts also has kind of become a bit transactional. The entry of the investment relation firms has also taken the thrill out of any discovery in research, in ideation, and made everything information driven. And the information is with everybody. So, where is the surprise? That in essence is what I feel this result season is telling me, and I feel that this is not specific to this result season. I think it's going to be this way for quite some time. And as an investor, one should have interest in companies which transcend what will happen in a quarter. So, you need to have a conviction in a theme and a conviction in a business and its management and in the scope, the potential to grow and the opportunity to scale. So, it is a very long journey that you must be looking at, and when you are looking at a long journey, every quarterly result probably becomes more academic than exciting. As an investor, I have been on this path for quite some time. So, I am able to look at a result and think, okay, I thought this would be the case, the company has done better than what I thought, or the company has not done as well as I thought, let me see what happens in the next quarter. So, this whole process of the result season becomes academic, very absorbing, very engaging, but hardly exciting. In a sense, the joy of predicting and the excitement of waiting and the thrill of discovering performance is as good as dead. I hope something happens that brings this joy back to investing and equity research. Let's see what happens. Thank you for watching this video.